Recording is in. Cool. Everything's set up. Alright, cool. So I was outlining what I want to see before I started this live stream while I was on the phone. I want to see this buy model on the 1 minute getting completed, and potentially, depends on how we trade into the buy side target here, we might get it up to all the way out to the equal highs from the morning today. And there was this BPR level I was watching. I wanted to see price inverting that BPR. Now it did. So I want to see it. And we have a dealing range here. It was marked out. Just tapped into it. And it's because we're in a range bound market at the moment today. That's the primary reason I want to see a buy side target getting hit or knocked out right after sell side was purged. So on the 4-hour, we'll see that sell side here. We just tagged it. Now I want to see the buy side delivery, and that is just because we are in a range bound market. So let's see how this fair value gap, if it leaves it open or not. I might execute in there. And there's an SMT divergence that happened at the order block of NASDAQ here. ES traded into the fair value gap and created a bullish SMT divergence that sets the stage up for the market maker buy model. And I'll be operating on the 1 minute just because we're range bound. I want to take partials rather quickly. So my main focus is not like 5-minute market maker model or 15-minute. Oof, that's harsh. This might be a breakaway gap now. $12.20 here. The problem is it shouldn't have traded into or below this order block. So that fair value gap shouldn't be traded into. Once it does so, it's like the chances are against you, the odds are against you. They're out 120. 120. Yeah, so you're long before SMT is present in the marketplace. So it seems like we might have a breakaway gap here. Yeah. If candle closes like this, there should be a breakaway gap. Let me see the reward here. Seems like we missed the move. For ES, I want to essentially see the earlier SMT getting faded, but before that, we have this original consolidation at around 5,080 level. That is the highest probability target for ES. Now we have an order block here. It really shouldn't trade back down into equilibrium of the range if it wants a clean delivery. The fair value gap there. If it leaves it open, I might execute one contract. Stop loss at order block low. Let me check out. So I'll use this as a support fair value gap essentially. long contract here. Stop loss below the order block. So if it wants to run the buy side really strongly, it shouldn't get down there. I want to target the original consolidation buy side. Which is at 18.10. Let me adjust that stop loss. Sell limit. And my execution right now is not technically is not perfect because I'm essentially longing in a premium zone. But for me, it was worth the risk because this is like 40 handle run. Well, that's 12 handle stop loss, like almost like 3R. Which is worth the risk. And if ES trades into this horizontal consolidation first, I'll move my stop loss at break even. So I'm trusting this fair value gap here. This is my silver bullet fair value gap essentially. I'm trusting that fair value gap holding candles above. So I don't want to see candles closing below that fair value gap. For this break, what would have been good price action for you to buy? It pulls back into the breakaway gap. So for me to buy, the best entry is anticipating the SMT divergence at the order block. So here, that's the lowest time frame confirmation for the SMT. You can use those fair value gaps here for your entry. That will be the best case scenario for you to execute in this price action. And your stop loss would be something like this. So you execute it on the IFED, let's say, targeting the buy side. Your stop loss should be at the order block low because we have an SMT divergence over there. And if it's bullish, it shouldn't violate this low here, which means SMT is getting violated. So those wicks are fine because there's a volume imbalance here. I don't care about those wicks. What I care is I don't want to see a body candle close outside. And I'm trusting this order block as well for my stop loss. Again, though, this is a late entry, which is, you know, not the best entry I just got, but I wasn't watching the price action because I was on the phone, so. I can delete this. We have also a market sentiment shift here with this satellite raid, rallied, so rejected in a fast manner, broke the structure, inverted the fair value gap with market structure shift, so that is a big sentiment change. And this SMT sets the stage for the market maker buy model delivery. Depends on how we get in the buy side here. I might actually full pull the equal highs, but we'll see. Let me check the equal range, the dealing range from there. Seems like the target is equal highs, considering we are chopping here. So what I'm basically doing is I'm looking at the dealing range from a potential target to all the way to SMR level. And if I see a price consolidating in that implied range, that usually indicates we will most likely target that level. If that makes sense. Take a look, how many handles is that? I might just pull that 60 handles. Yeah. We'll see. I want to see how it trades above this level first. And I'm probably not going to pyramid here because I already have a late entry. Time today, 14:02 2 past 7. Okay. Now the idea here is basically I want to see expansion on the hourly chart. That's the thought process. If it wants to move, it should rally very soon in a fast pace up. But if we start to chop here, how do you manage that? If I see too much too much back and forth action, I might just put my stop loss at break even or collapse the trade if I can't put it in the break even. The only thing I don't want to see here is basically this fair value gap getting violated. Other than that, it should be good to go. There's another fair value gap here. S&P at highs, short term. I want to see ES just like rallying right now, because that might cause a deeper pullback into the breakaway gap, which will stop my position. So let's take a look on the 15 minutes. Okay. Now I want to see ES rallying above this high real quick before anything else. Otherwise, the odds are against me and against my stop loss. Because like when it comes to like trading or executing, your entry level is important. And because I entered in the premium area, I'm taking more risk here. Whereas if I was to execute in the discount area, that would be a less risk for me. Because by the time when price gets here, if I was entering here somewhere, I would have put my stop loss at break even already. No lower wick on the 1 hour and 4 hour. Let's see. A tiny wick on the 1 hour. Yeah, that was a strong reaction though. Like if price comes down again on the 4 hour, the most it could go is CE of the previous wick, so here, which would invalidate all the long positions intraday. Because that means we're not rating the buy side today. It's not going to have enough time to do so. Let's get back to the charts for 1 minute. I really want to see ES rallying here. Let's see, left equal highs. Check out if we have an end dog or something. Okay. ES original consolidation. That's why when I'll put my stop loss at break even on Nasdaq. Regardless of how this trade pans out, you really are a phenomenal teacher, brother. Thank you so much, dude. Really, for real, like, I appreciate that. The strides I have made in 2 weeks isn't unbelievable. I have the same exact pre-PM support annotations as you, and this is a big enough trade for me, win for me. Good, great to see, man. I love it. I love your charts and executions a lot, by the way. For me, if I get stopped here, that's fine, because like my risk is basically not even 250 bucks, which is fine. The only thing I could have done better is just executing a discount, but I was quite late because I was on the phone. I want to see ES rallying here, then I'll put my stop at break even. Let's see on ES on the 15-minute. Let me mark 2 o'clock open. So this is 2 o'clock open to manipulation. A little tiny wick there. I shouldn't really fuck around at that level anymore, just because we're respecting the silver bullet. We already expanded, violated the highs. Now I want to see like a couple consecutive up close candles into the buy side target. Now ES took the high. I'm going to put my stop loss at break even there. There's a 15-minute fair value gap. It could come back down there, which is fine if it does so. But I would rather see a quick expansion higher. Normally in this price action here, if you want, so let me point out something in this price action here. So after the sell side rate, if you're expecting a bullish move, you wait for the structural shift, and if there are present SIBIs, you expect them to get violated, right? Once it's there, you have to wait for an SMT divergence, and there is a way to anticipate an SMT divergence here. So if you take a look at ES here, this was a 5-minute high, and this is a 5-minute high on Nasdaq. There was an SMT divergence between assets there, bearish SMT divergence. When you have that, you expect a pullback because you're bullish, right? You expect the lows to be secure. So in this case, because Nasdaq is stronger, you could expect an SMT divergence or a higher low on Nasdaq, whereas ES needs to take out the low. And then comes the PD race over there. When you look at the ES chart, there is a fair value gap there, right below the order block low, and on ES there's an order block, so you can anticipate an SMT and a Nasdaq holding the order block, whereas ES violating the same order block, right? That's how you could anticipate. Once ES raised the low, you can buy Nasdaq because you're anticipating the SMT divergence. If that makes sense. Seems like we are about to get tagged here. Let's see how much we made. Oops, $600, $700, something like that, which is beautiful. Now I'm gonna use 5-minute candle open for my stop loss here. Hello, buddy. How you doing? It should really tag the buy side first before retracing back into open of the 5-minute candle. Same thing on the 15-minute open, using the same level. You could also like keep your stop at break even if you want to. For me, it's just like I would rather, make some money than being break even because I'm on one contract here. You don't want to target equal highs. I would have, but because I'm in one contract, I don't want to. If I had two contracts, I would have taken partial here and then target the equal high there. So I want to see this 5-minute candle rating the buy side there before it closes. How's your day going so far, Fabio? Amazing. Oh yeah? Congratulations, buddy. Did you copy trade me? I'm kidding. Oh yeah? Are you still in? It's a late entry though. Like, if I was present here, I would have longed the breaker there. 60. Oh, nice. Nice, nice, nice. I was looking at this at SMT divergence at the low. I was anticipating that, but like then I got a phone call, unfortunately. Where would you place your stop if you entered at the SMT and Q? Same deal. I would have been either trailing by using the 15-minute candle open, or I would have just left it at break even. Either or. I'm gonna even trail it further more here. What's the profit there? 20 handles, not bad. So, speaking of which, when it comes to stop losses, I rarely use 1-minute PD arrays. I rather use 15-minute or 5-minute candles, open, high, low, and close, just because I forgot my thought there. I forgot my thought, like literally. Meant the initial. Oh, I see what you're saying. Okay, great question. Two things over there. If you entered anticipating the SMT when it tapped into inverted fair value gap, you could put your stop loss below this low because you're anticipating SMT, and if you're right, it shouldn't get violated. But let's say, for the sake of this conversation, if you were to just wait for a market structure shift and fair value gaps, and then you entered here, right? It would have been the same deal. Again, you would use that same low because there's an SMT and it shouldn't be violated as your stop loss, which is 12.50 handles. Pretty good. Pretty good. That's a trade I would have normally taken. And target the high. It's like 5R trade. Like what else you could want from a range bound market, you know? Let me see the 5-minute here. 5-minute. Whatever, I'm not gonna move my stop loss anymore. You said you won't use 1 minute PDRs for stop loss. For trailing, so for position management, I rarely use 1 minute PDRs. I would rather look at, like, for example, let me just pull up, make it bigger. Let's say 15 minute. What I would do is, as it expands higher, I would trail my stop like step by step. First, the open of the candle, and then once the other candle opens, that candle's open when after the expansion. So in this case, I would put it here, right? And that's how I trail my stop loss into the buy side target, if that makes sense. That's just for trailing though, not for like initial entries and stuff. Is there a problem with my voice, Fabio? Okay. And then you could use, not in a range bound market, but like, so this is the range EQ, right? You could use the range equilibrium, any PD area below it, whenever a price trades into that PD area, excuse me, you could use that as a pyramid entry. The way I would do it is, if you're trading with a prop firm on 100K account, let's say you're trading with 100K account, I would build a position into 3 contracts maximum using any PD array below the equilibrium of the range, so any discount array. Say you entered this at the breaker, right, or the fair value gap here, unicorn, 2 contracts there, and it expanded, right? Break order block here, breakaway gaps. No, you don't have to be like impulsive here. You can wait for it because it's gonna give you the opportunity to enter pyramid, right? And it expanded higher. There's another fair value gap, and it touches the equilibrium of the range. That's your second entry. I would enter 1 contract there, so I would build my position 3 contracts in a 100K account, and then for the rest, I would just ride it. If you're doing the same thing with a 50K contract, 50K account, personally, what I would do is I would enter 1 contract initially. Then on the second, if it presents in the second pyramid entry, I would enter one more. So I would build my position into 2 contracts the most with 50K account. And with 150K, my initial entry would be 3 contracts. Then on the first stage of the accumulation, I would enter 2 more contracts. And on the second stage, I would enter 1 more contract, so I would build my position into 6 contracts tops. By doing that, you actually reduce your risk, because like if you were to enter a position initially with 6 contracts right away, that's way too much risk. Especially if you're trading with prop firms, you'll have daily drawdowns, right? If it goes against you, you'll breach your account most of the time. Let me check ES here. Do we have SMT? No. Okay. Don't fuck around with me here. Just fucking take me out already. I gotta scale. Yep, scaling in a position is the best way to make good money, in my opinion, with the least amount of risk. Now, also, one thing to note here, because there is a range in this area, price really shouldn't come back down there anymore, at least before taking the buy side. Yeah, SMTs anywhere. Why does it not take it out? Let's see how this 5 minute fair value gap acts. And because we are in a range bound market, like this is very typical. It stops 1 tick below the actual liquidity pool. It's very, very typical. But for me, like I can't be bothered by that. Like if it stops me out here, I don't care. I make my money. That's my mindset. There's a 1 hour fair value gap from Thursday. Is it? It's right at the top off. I mean, on the 1 minute though, it still doesn't have bearish SMT, so I'm not expecting a deeper pullback here or a reversal. So at least ES or Nasdaq should take the most recent swing high. Let me check out the hourly though. This one. Oops. Yeah, I mean, I really don't care about that fair value gap at all anymore, just because market delivered the sell side already. It should really use that fair value gap for the buy side targets now. Like flip it, right? Then maybe retest and rally. We're trading into 5 minute fair value gap here. Let's see how that goes. Oops, let me just delete that. I want to annotate this as my silver bullet fair value gap also. Get rid of the midline. I hate the midline. Cool. You guys can clearly see the manipulation here though. Once 2 p.m. candles open, it just comes back down into the silver bullet fair value gap if it's present in the market. Uses as a catalyst, and that's the manipulation. That retracement is the manipulation on an individual candle basis. Don't hate the midline. It sucks. I really hate it. I don't know. Maybe I'm OCDing or something. I have no idea. Okay, I'm gonna trail my stop here because it seems like we're gonna have an SMT divergence. I would expect a deeper retracement, maybe like 15-minute fair value gap to retracement here. So once Nasdaq takes out this low, this high, I'm gonna trail my stop again. It should really actually TP me. I'll let the chat's just watching while I eat lunch. Enjoy. What are you eating? Yeah, it tells you CE, but it looks ugly. I don't like it. I don't like how it looks. I would rather use like, I don't know. It's just me. I'm weird. So because I think we're gonna have a bearish SMT at highs here after Nasdaq takes out the horizontal consolidation buy side target, I think we might have a deeper retracement into 15-minute fair value gap and then rally the equal highs for the rest of the day. Alright, I'm gonna probably close the position here. Never mind. Took me out. Alright, let's see what happens here. If ES can't catch up with Nasdaq here at these highs, I would expect a deeper retracement. But if you're still in a trade, let's say you took a partial here, depending on your entry, I would use, again, the fair value gap on the 15-minute for the trail stop, or just leave that break even if you don't want to be like concerned about your position. That was a clean delivery. Beef burger for lunch. No bagels. No bagels for you today. We'll take the extra $40. Let me see. So from there, $400. That's cool. That's cool. Now, for me, the lows here are not safe. So if you were to put your stop loss here, that might get tagged just because how 15-minute looks. It could just trade back into fair value gap on the 15-minute before rallying, rating the equal highs or the other buy side targets. I also have an engineered liquidity here, which should be taken out as well. Let's see. I meant when you said you were gonna close it. Oh yeah, yeah, yeah. It's because I didn't believe ES was gonna rate the high here, the short-term high. So I was like, you know what? Instead of like waiting for it to turn back down here for 14 handles, let me just take it off for like one point loss. The most important takeaway here is, guys, I mentioned this before. When you're trading, if you're bullish, you need to tape read this expansion leg. So what I mean by that is you should be concerned about the PDRs in this leg, right? If you're bearish, same thing. You need to be concerned about the expansion leg here when you're tape reading or executing. You shouldn't be looking at the old price action, the sell model here, sell side of the curve, and be concerned about that. Like for example, I've seen this a lot. A lot of IC traders does this. They're looking at these fair value gaps for short sells. Little do they know is marketed in a buy model here, right? And because you have that information, how you would see these old PD arrays is basically, if you're right, price is going to knock out those levels, right? That's how you should read the price. And on the flip side, so on the expansion leg, what you need to look how you need to read the price is basically those PD arrays. Every PD array you see here should support the price for higher delivery. I hope that's loud and clear. That's very important in my opinion because I used to do that a lot. So I was like, oh my God, there's a fair value gap here. There's an order block there, right? And that's like OT or whatever. Oh my God, it rejected. Let me short this. You know, that's not the case though. That's not how you read the price. I think I mentioned that before as well. Let's see on the 4 hour. Fabio, did you TP or what's up? Are you getting a payout today? Okay, so you're full pulling to. No, wait for the buy side. The buy side is more likely because the equal highs are engineered essentially. It'll probably gonna be like one candle. Like once it trades into the equal highs, one candle like spike. The most important thing then is to make a clear spot for a market maker model. Exactly. If you don't have those signs, like if you don't have an original consolidation, and if you don't have a manipulation, which is in this case sell side purge was the manipulation, right? And then if you don't have a shift in the structure, SMT divergence, like those are the signatures. And if you don't have those on the chart, that means the buy model is not initiated just yet. And the reason market is going from sell side to buy side right now is because we are in a range bound. If it was a trending market, this wouldn't have been the case. But you need to have the context of what price is doing in the 4 hour, right? Because the sell side couldn't have been just a rate. Yeah, I actually mentioned that in the morning session when I looked at the 4 hourly chart. It is range bound. And in range bound market, you'll see price going from buy side to sell side or vice versa. Yep. So if you look at this price action, it is stuck in a range, and that tells me the likelihood of going from one side to the next. In the first place, I wanted to see from buy side to sell side, but it didn't deliver, so I did the opposite because my market presented me a clear entry and a context. Yeah, Fabio is the king of ranges. He reads ranges quite differently than I do, but he's really good with ranges. Do you still look at deviations? I remember you used to do that a lot. Okay, that's actually smart. I like that approach. You should give it a range class because the way I read it is different than yours. Yours is like more, I would say more advanced. Mine is like more simple. At least for me, it is simple. Yeah. Can you show us a little on how you would annotate this for your journal? Of course, let's do that. So the way I would annotate this for my journal is I'm gonna delete this so to make it cleaner. You know what? I'll start over. I will start over. The viewing range. So horizontal consolidation, right? First, I'll annotate the target because without a target, basically you don't have a plan. Then I would draw the target in time, annotate that, and then I'll start tape reading as I did in during the live execution. Hold on 1 second. Here, south side is taken out, then returned back into the range. Shift in the structure, I would annotate that with red and put a market structure shift. Then I would annotate the inversion fair value gap here just because that inversion fair value gap is also indicating strength in the move, in the up move. It is not just a random inversion. It is after a major sell side in a range bound market, and it violated with one candle. That's why I would consider that. That's a significant level for me. In fact, it is true market structure shift. If there was no fair value gap there to get inverted, then this move probably would have been less impulsive. But anyways, so I would annotate that, and then I would read the order block here. I'll move it in time a little bit. Hold on. Then I would annotate the SMT divergence because that sets the stage. That is the smart money reversal. Before that, there's no reversal. Period. Like SMT. Okay. Now from that SMT, I would just read the PD arrays in the expansion leg. So I would annotate the lower fair value gap, upper fair value gap if you wanna. Then there's a breaker block here. I would annotate that because this is essentially the unicorn model plus the IFED fair value gap right there. Bodies are respecting, right? I would type breaker here also. Then you should be marking out these little fair value gaps here, here, and there, including the volume imbalance. These are all breakaway gaps. Annotate that, and maybe like point out why it is a breakaway gap, because when you're reading price live, just like I did, I annotated this as a breakaway gap right away once this candle closed above the down close candle, right? Once it closes, it confirms the order block. Once the order block is confirmed, you have breakaway gaps below. So annotate that and put the reasoning behind it, so you'll see it next time. And I would annotate the silver bullet fair value gap here. Maybe change the color, right? And there's a BPR. Annotate that. Moving further, let's see what else is here. There's this fair value up there. What else? So far, that's all. And then, what I would do, I would also be mindful of the order blocks here in this leg. Like for example, not necessary, but like I don't know. I wouldn't take that as an order block, honestly. Instead, what you could do is you could use the old order blocks on the buy side of the curve. This up close candle. Use its high, not high, close as like draw it in time and type like reused order block. That essentially means an old order block in the sell side of the curve is now being reused on the buy side of the curve. It's acting as a support, so to speak. What else? What else? What else? Here, another thing. At the lows here before the structural shift, price spending time here, prints like 5 candles here, then immediately reverses. You could annotate this as trapped shorts, because basically the market is trapping shorts there. What this means is once the shorts are trapped, market is not going to give them an opportunity to break even their trades, meaning it's not going to come back into that range again. What else? What else? What else? What else? Oh, then the range equilibrium. I'm gonna delete reused OB real quick. The range equilibrium, draw that in time, and just take a note, like how many times it tapped into this gap after breaking the equilibrium. That is also important. Yeah, 1 second. Let me just tell one more thing. This is the last thing probably. From your entry, so mine was here, to draw liquidity, your target, look at how many time, like how long did it take. Like in this case for me, it was 26 minutes. I was in a trade for 26 minutes. Annotate that and take a note of that as well. And your execution time. So for me, it was 2:04 p.m. That's how I would do it. That's how I do it. I'm still journaling. Yes, Fabio, I'm all ears. That's a great point. That's a great point. It is also hard though, hard to do that because usually we don't we don't know how we feel during a trade, or we don't acknowledge. That's a really good point. Thank you. Also, one more thing I just want to mention, I forgot. Be mindful of the SMT divergence and the expansion leg as well. So for example, after my entry, we had an SMT divergence short term here at these highs, right? I'll annotate that and take a note of why and how it pulled back into whatever PD area you're looking at. Because usually these short-term SMT divergences will cause pullbacks. And if you're aware of those during the execution, you will not be concerned about your position or about the pullback itself. And over time, it'll give you the confidence you need as a trader. Because you got to trust that. You got to trust your PD arrays, silver bullet, whatever the case is. Silver bullet, you got to trust that silver bullet. Or if you're trading breaker blocks, you got to trust that breaker block. Because if you're executing, that means I'm assuming you know what's going on. If you don't know what's going on, no trade, simple. No need to be impulsive. Um, Let me go over. Um, PAPDS from you helped me a lot in the beginning of trading ICT. I love to hear that. Why is tapping into equilibrium multiple times important to log? So the reason it's important is because the more it goes back and forth here, that usually indicates a high resistance liquidity run. So it's basically to train your eyes and to give you the confidence of holding trades even better in the long run. And also it's for stop loss management as well. If you know that it could go back and forth, back and forth, back and forth here, you're going to be managing your positions accordingly. I set up a Notion template that I use for journaling, has been quite helpful. You could share that in the general chat if you want to. Could be helpful for other people as well. I mean, if you don't want to share it, I would obviously understand that also. Did I miss anything? I missed one comment there. Top 25% quadrant of that H1 fair value gap is lined up exactly with 830 open and where price back is there on the manipulation. Surely random. Everything is random. Nothing is algorithmic delivery here. Any suggestions for backtesting as well? Something to point out that help you during backtesting? For me, whenever I was backtesting something, I had an idea of what I was backtesting. For example, when I was backtesting market maker models, that was my only intention, right? And I was literally taking notes as if I was journaling my trades the same way. And the most important thing for me was noting when the entry was presented. And usually that's how I became silver bullet trader in the first place. I realized my focus was not silver bullet during my back tests, but what I realized was I was taking entries during silver bullet time window the most. That's when I start focusing in silver bullet. And over time, like when the more you take notes of those things, like your execution time, price going back and forth, like how much did it go back, pull back, whatever, you're gonna build confidence over time, and you're gonna sharpen your own model, your own executions, and you'll become more patient, more confident, and those are the things you want to have as a trader. Like you can't be afraid when you're in a trade, or you can't be hesitant when you're in a trade. If you're executing, you just gotta let it go. That means you know something, you have information about it. Just gotta let it go, and that will come with backtesting. Amazing trait. It's motivating me. Love to hear that, brother. Killer Whale has a actually great point. Recording your executions, video recording. That would be great. If you could also, along with annotating the chart, you could use, if you have a mic or whatever, verbal annotations. Maybe you could speak out loud how you're internalizing the price action. What do you recommend, Fabio, for backtesting? Holy. Um, Hold on one second. So the question was, any suggestions for backtesting? Something to something to point out that helps you during your backtesting sessions. Yeah, nice. I like that. I like that. Rewatching your trades will give you an edge for sure. It helped my executions and patience, and also some days where I win big, I will be more level about it because I know the mistakes and the places where I could have messed up the trade and got lucky. Yeah, I love to hear that though. Rewatching your trades, I agree with that because what also helped me was ICT's early 2023 mentorship when he was executing live. It unlocked a lot for me seeing how he internalizes price. I realized I was doing a couple things wrong. Sure. Great point. I'm using NinjaTrader starting in January 2023 because in NinjaTrader you can go over 1 minute, not like TradingView. Did you backtest them? I never backtested in NinjaTrader. I really don't like their user interface. Not gonna lie. For me, it's really hard to chart on Ninja just because I'm used to TradingView. Your best bet is FX Replay. It's actually a really good tool. Yeah. No. What is he ranting about it again? Oh, he's talking about Tanya. That's why Tanya left the stage. I'll, I'll check it out later. What? What did you say? Oh, I see, I see, I see. I'll check it out. I'll check it out later. Yeah, he loves her. Oh, 100%. Yeah, I mean, no, I mean it's fine because like consolidation above the buy side here is pretty normal. Yeah, I agree. No need to be greedy here. King's Blend, take care, brother. Thanks for coming by as always. I'm also probably gonna wrap it up here in about 34 minutes. So if you have any questions, guys, just ask it away right now. Should I rant about Chick-fil-A? How overrated it is? I was actually thinking about doing shotgun Saturdays, just like his. Not for ranting purposes though, just for like to talk about. No, 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 don't laugh. I'm actually serious. Serious. To talk about like psychological part of the things. You know what I mean? Not sure if Saturday is the right day to do so though. I'm sure like people likes to enjoy their weekends and stuff. Dude, I don't want to make it public. We'll see. We'll see. I'm still thinking about it. It's just an idea right now. I was just pitching. Saturday is great for those. Duly noted. Do you remember what you say about when price begin to range in market maker model? Or we should be observing where is rather where the breakout will come out from the first, then the direction we should align with exactly what pan out in the silver bullet. I'm not quite getting your question there. What I was talking about ranging when it comes to market maker models is basically whenever market maker model is completed, meaning the original consolidation target is knocked out, you could anticipate a choppy price action consolidation before price moving in one direction or the other. It's not going to move right away. In this case, if you look at it here, it is kind of consolidating above that level, indicating higher pricing. Okay, it's 12. No, it's 3 o'clock. I think I'm gonna call it a day here, you guys. Thanks for coming by as always. Fabio, thank you for your participation as well. You know, I always respect your thoughts and